Hello and welcome to Live Tutorial Tuesday. We had a bit of an out in the stream, so we're back up on the stream. I'll give a quick recap of what we have so far, and then we'll get going into the problem. So we are on part four of the problem, the comprehensive problem. If you've missed parts 1 through 3, that's okay. We're going to start from here forward. This is a standalone piece from here forward. If you want to go back to the prior pieces, that is fine too. I don't think there's a link in the description. We kind of overlooked that, but they're easy to find. They're going to be the Live Tutorial Tuesdays 1 through 3, going through the comprehensive problem. Again, we can go from here forward, and I'll explain how that works in a second. Okay, so the materials that we will be using throughout this process will be the Excel worksheet here. So this is going to be us doing it by hand. The idea being that we want to go through a comprehensive problem by hand, put it into Excel, and then put that same comprehensive problem into QuickBooks. And this is good for both students and people who have experience in QuickBooks, because they both have similar issues. They're trying to ask, well, how can I have the theory and use the theory to apply to software? How much theory do we need to know? How does it tie out? How does the theory tie out to the software? Those are the things we want to do as we go by putting the information into Excel first and then into the QuickBooks software. So this will be the Excel file that we will be using. This will be the QuickBooks file that we will be using. Both the Excel file and the QuickBooks file are available in the link below, so you could go to the link below, find those files, and then use them as we go through here, and or use them at a later time. There's also going to be a file that will be for a Google Sheets file, so you could also use the Google Sheets file. It is a free file. Google Sheets not having as much capability as Excel does, but it does everything we really need to do. So it's highly worthwhile, especially if you don't have Excel, to use the Google Sheets. It can really be helpful. We can also work that problem live if we so choose during the presentation, because there's a live file there and you can download it. The QuickBooks file, on the other hand, it is uploaded, but I don't expect everybody to have QuickBooks. It is a program that's going to be a more expensive program. The file is a backup file, so if you download it, you're going to have to upload it and restore it to the program. If you don't have QuickBooks, that's okay. The idea here is just to show how the theory that we're putting in place, whether you're learning it as a student or you know QuickBooks and you're trying to learn the theory side of things, the question is, how do we get it from kind of the theory, doing the process by hand, to then putting it into Excel? How do the two things tie out? So I'm going to go back to Excel here, and we'll work through this problem. There's going to be a few tabs that we did prior. Again, you don't have to have done these tabs prior, but if you want to do them later, you can. We're going to think of this problem as a standalone problem and or a problem within the larger context. As a standalone problem, all we're going to do is we're going to take this trial balance, enter that data into financial statements. That's the point we are at. What have we done so far? We have started the company back on this first tab. We started the trial balance out by entering data into the trial balance, starting with the owner putting money into the business and moving on from there. We took those journal entries, we entered them into the general ledger over here, and that general ledger then was used to generate the trial balance here. So this looks like a very complicated spreadsheet. This is very complex looking when people first see it, but really we're only doing one cell at a time. So if you go back and take a look at that, it's not as bad as it looks. We did the same process as well in QuickBooks. So we took the same information, we put it into QuickBooks so we can see how the two things would line up. What do we need to know within QuickBooks to generate this same data? What will QuickBooks do by itself? What type of data input do we need to put in place? We then took that trial balance and we applied it to the second tab here, the adjusted trial balance. So we took the unadjusted trial balance. We then made our adjusting journal entries, which are just journal entries as of the end of the time period used to make the financial statements correct as of that point in time, to create the adjusted trial balance. Trial balance is just a trial balance, really. It's just the timing of when we are at in terms of the process. So this is before we did the end of period adjustments. This is after the end of the period adjustments, meaning we've adjusted it to an accrual basis and we've done like the bank reconciliation and everything to it in order to create the finished product that the financial department does, that being the financial statements. That's what we're going to do on the third tab. So we are now on the third tab, creating the financial statements as a standalone problem. We're going to say, all right, now we have the adjusted trial balance. We need to make financial statements from it. In terms of the bigger circle or the bigger cycle, we had the entries, the adjusted entries, and now we've got the adjusted trial balance with which we will make the financial statements from. In terms of QuickBooks, QuickBooks already generated the financial statements. When we enter the data, that's what QuickBooks does. So we can see on the trial balance, it's been generated from the data we entered into QuickBooks. And QuickBooks also, because it's just a program, it's just a puzzle, as we'll see, has reshuffled that data to relevant forms, those forms generally being a balance sheet and an income statement, a profit and loss, the things that we are making. So when we generate these forms, what we're looking for is how is QuickBooks putting this together? From QuickBooks standpoint, we want to say, hey, if there's a problem in QuickBooks, can we see that problem? Can we go back to the data, fix it? Can we set up the data so that the QuickBooks forms will be processed correctly? So we're going to look how they're put together with that end goal in mind. So I'll be right back. I'm going to check a couple things and I'll be right back. All right, everything looks good this time. That is good. So let's go into this. We'll see what we have here. So in the Excel file, what we're going to do is just take this. I would just think of this as a puzzle. It's the best way to think of it. It makes it the most fun kind of way to think of it. The puzzle is now formatted on the left-hand side in terms of debits and credits, in terms of the adjusted trial balance. We know that it is in balance. We know the the double entry accounting system works because the total debits I have with positive numbers minus all the credits equals 0, meaning the debits minus the credit are 0. Therefore, the debits equal the credits. It's in balance. That's what this green 0 means. This is going to be the net income. It calculates the revenue minus the expenses. The point being that if we are in balance, then it has to be able to reshuffle this data and be in balance over on the balance sheet, and the related accounts have to be related to that. How? We'll see how that happens. I want to point out that the trial balance is really kind of a more compact, nice way to see it if we understand debits and credits. But people that don't understand debits and credits, of course, want to see it in terms of a plus and minus. So just to show you that real quick, in this one trial balance section, in this one format, I can say, okay, what are the assets? I can just highlight them and say they're $46,060. What are the total liabilities? I can highlight them and say Excel adds them up to $4,376. What is the net income? I can just highlight the credit minus the expenses on the income statement. $3,684 is the net income. What is equity? Two ways to find it. All the blue accounts is the $41,684, or assets minus liabilities, basically debits of assets minus credits of liabilities, is the same $41,684. Everything is really right there in a pretty handy place if we format it in the proper format. But if I was to show someone else that and tell them, tell me what equity is, it would be more complex. What we want to do then is put this number, the building blocks, into a plus and minus format. That's what we're going to do here. So that is going to be the balance sheet, the income statement, the statement of equity. Of those three statements, the balance sheet is really the double entry accounting system. So a lot of textbooks will start with the income statement and feed into the balance sheet. But I'm going to start with the balance sheet for a couple of reasons. One, it's everything. It gives you the big picture kind of first. And it's often the first report that we're going to look at. And it also is in order of accounts, meaning we have balance sheet accounts and then income statement accounts. So for that reason, I'm going to do a bit of an unorthodox method, I guess, and start with the balance sheet and say the trial balance, in essence, is the balance sheet, and start with that big picture and then see how the story gets us to that big picture. So in terms of a movie, we're kind of starting at those types of movies that start at the end with the heroes like falling off a cliff, and then you got to go back in time and see like how he got to that point in time, or he or she got to that point in time. that we're going to do that here. Hope we're not falling off a cliff, but we're going to say here's where we're at this point in time, and then look at the story statements, the income statement and the equity statement, to see how we got here. Okay, so a couple formatting things. We're going to say assets, liabilities, and equity. We know the balance sheet is going to be as of a point in time. There's only one date, 3/31. I know it should have a name and everything, but this is going to be kind of a rough draft just to put the puzzle pieces together. So within assets, we usually break out assets into a couple different formats, starting with current assets. It's useful to look at the formatting, both here and Excel, and get used to some different types of formatting. Notice I put current assets and then a colon. That generally means I'm going to have a group of different accounts that are going to be current asset type accounts. Now, I can just go down straight down the balance sheet and say cash, current asset, yeah. Accounts receivable, yeah. Supplies, it is. Prepaid rent is. Prepaid insurance is. Office equipment is not. Why not? Because prepaid, our current assets are assets that are relatively liquid, whereas the office equipment is something that's going to be there for a long period of time. So all of these, I'm just going to list these out basically over here. There's a couple different ways we could do this. I could copy and paste it. I can even use a formula. So for example, I could copy cash, put it right here, and put it in H5, right click and paste it to 1, 2, 3. Notice it indented for me. That is in the home tab, alignment, indent. So if I unindent and then reindent, I'm going to unindent them now and just reindent them. So I'll put them in there first, and then I'll go through and I'll reindent as we go. We're going to go home tab, alignment, indent. So that's just the formatting that we will have. Note that we could even use formulas. I could be here in H6 and say I want to equals this receivables, and Excel will pull over the wording of it. We could do the same thing here. I could say this equals the supplies, and I could even auto-fill it down. If I say the next one's going to be prepaid rent and insurance, if I go on this tab and autofill, I could autofill it down. I could also type it in there, of course. That's perfectly acceptable. And I'm going to highlight these now, those cells, home tab, alignment, and increase indent. And now they are indented. Then I'm going to put the numbers in there. And I recommend using formulas as much as possible with the numbers. With the wordings, not so important. With the numbers, I think it kind of is important. So I'm going to put the wording in there. I'm going to go to the cash, and I'm going to go in I5. I'm going to be in the inside, not the outside, not because it's a debit, but because that's the format in terms of plus and minus. And we're going to say that that equals and point to this 13,960 and enter. So we just pulled that over. I'm going to do the same thing here. We're going to say that the accounts receivable equals, point to that 1,400 and enter. I'm going to do the same thing here, equals the supplies, 800 and enter, equals the rent, prepaid rent I should say, and enter, and the last one being the prepaid insurance. Now you might be saying, hey, is there an easy way to do that? Or asking, hey, is there an easy way to do that? And there is. We can, if I delete these and I use the autofill, I can see that these cells are relevant in area to this cell. So I can put my cursor on this item and highlight down and autofill down in that way. And that will autofill the information. I'm going to make this bold, all of it. All right, then we've added these up on the inside, then we're going to pull them out to the outside. I'm going to go ahead and underline it. I'm going to go to the home tab, alignment, and underline, and pull this up to the outside, and we're then going to call that the total current assets. I'm going to click off of it, back on it, just for formatting purposes, and go to the home tab, alignment, indent 2 times, and put this in the outer column. Obviously, if we did this with a calculator, we would just add these up. We would say it would be 13960 plus 1400 plus 800 plus 10000 plus 2200. We're going to do that. Hopefully I did that right, but we're going to do that with the sum function. In cell J10 equals the sum of these items, and it should give us that same number. There we have it, and so that's how we would do it in Excel. Now, in QuickBooks, it's going to give us, it's basically going to give us that information, right? So in QuickBooks, if we're looking at the balance sheet, we're going to be over here. I created a report for balance sheet. It generally will have current assets, and then it might have some subcategories depending on the type of balance sheet that we have generated. And so we've got the cash, we've got the accounts receivable, other current assets, and then we've got the total current assets here, 28,360. That should be what we have, the 28,360 in our representation as well. All right, and then we're just going to move on to the next one here. We're going to say the liabilities. Those are going to, well, then I'm going to go to property, plant, and equipment. We've got these two left over. If we wanted to check this, by the way, I can just highlight these and say that adds up to 28,360. That should tie out here. Now we're going to do the last two, and we're going to put that into another category, and that's a very long category: property, plant, and equipment. And I'm going to put a colon saying that we're going to have subcategories here. And again, I'm just going to, these are the two that are going to be in there: office equipment and accumulated depreciation. I'm just going to copy those. I'm going to put them right underneath. I'm going to paste them 1, 2, 3, just the values only. Then go to the home tab, alignment, and increase. And then I'm going to pull those into the inside again and say that this equals that 18. And then this one has a credit. And I don't really want to put a credit here. I want to tell the reader that it's a subtraction problem because it's going to be. But I'm going to put it down by saying less. Tell the reader with words, hey, it's not a minus sign, it's going to be a less. That's kind of formatted. It could be different in different financial statements. To flip the sign with a formula, I could do this. I could say this equals the 300, go back on it, and then put a negative in front of it. And what that's doing is just saying, hey, Excel, take that number and then multiply it times -1. Or I could just, in Excel, not in Google Sheets, but in Excel, I could just say negative instead of equals and then point to that 300, and it'll take it away there as well. Now, then we're going to have the subcategory of property, plant, and equipment without the colon. Property, plant, and equipment. I'm going to remove the colon. And then we're going to sum them up over here, or do something at least with those two columns. Now, we're going to do a subtraction problem, but this is where a lot of people get mixed up in this particular area because they sum these two up, and that's one place people are often off. So let's do that, and let's see what happens. So I'm going to do, this is wrong. I'm going to equals the sum of these two items here. And now that's 18,380, and then total assets should be all of this now, all the green, which represents this number and this number. So we found a home for all these. We might even want to highlight and say, hey, I found a home for all those. Once we find a home for everything, then we should be done. So I'm going to go over here and say this is the sum of these two numbers and enter. So that's going to be the 46,660. Now, if I compare that to what the green accounts are here, 46,60, it's not the same. So that's going to be a problem. Why is that the case? Well, this is going the wrong way, and that's kind of how we can piece this together as we go. So what we need to do here is flip the sign. And this needs to be a 300, but I'm going to make it a subtraction problem here. So in Excel, I'm going to say this equals the 18,000 minus the 300, and that'll give us the 17,700, represented by the debit minus the credit, 17,700, gives us now a total of 46,60, summing this up, a total of 46,60. And if we look at that in QuickBooks, then we can see the total assets, 46,60, and we have fixed assets, also known as property, plant, and equipment. The terms, another thing we need to kind of understand, could be slightly different in terms of how they're going to format it. Also note that the groupings that we have could differ slightly in terms of how many accounts we put into one category, meaning we might have multiple prepaids here. So we got prepaid rent, prepaid insurance. We might just call them prepaids, and put both of those into one account. We could group them together depending on how many accounts we have. Clearly, this is a fairly small example, not that many accounts. Therefore, having too many accounts is not really a problem in this case. Now, we're going to represent our balance sheet with the assets on the left-hand side, the liabilities and equity on the right-hand side. Unlike QuickBooks here, which is representing assets on top and liabilities and equity on the bottom. So we'll just show in a bit of a different format just to show how it can be in a different format, but the essence of it is the same. So we're going to be back over here and we're going to do the same for liabilities. Liabilities are broken out in a similar way, meaning we have current liabilities, colon, and those current liabilities are going to be basically everything we got now. We don't have any long-term liabilities at this time, meaning liabilities that are due over a year's time period. So we're still going to indicate that. We're going to put current liabilities to tell our reader, hey, they're all current. And we've got payable, salaries, unearned fees. So we could copy and paste those. I'm going to do it with a formula here. I'm going to say this equals this accounts payable, and it'll pull over that number. And I can even use formulas again to pull it down. So I could say copy and paste that or autofill, put my cursor right there, autofill it here, and it'll take the relative references and just pull them over. We could type them in there. So if this is if this is a problem, that's okay. You could just type them in there, and that is fine too. But just some formatting things that we can do. Now note that we have credits over here, and we don't want credits over here. I want to pull them into the inside, not because these are debit and credit columns, but because they're plus and minus columns and we're summing up, we're adding them on the left and summing them on the right. So I want to flip the sign again, and the way we're going to do that is I'm going to put in, instead of equals, a negative sign and then point to that 800. So I'm going to take that 800 and flip the sign. So take the 800 Excel and flip the sign, please, or multiply times that -1, which will flip the sign, and there we have it. So, and then we can do that same thing down. I can autofill, so I'm going to put my cursor on autofill and drag it down, and auto drives it down. Dr. Phil does the calculation, and autofill creates those numbers. So there they are. It's coming from there. It doesn't just take them from nowhere, obviously. It's coming from there, and we're putting them over here. Again, you could type them in there. I highly recommend using formulas, however, because if there's a problem, formulas are a lot easier to find, but you could put each formula in there individually as well. Then we're going to have total current assets, total liabilities. And notice I'm just going to put liabilities. And this is a kind of a tricky thing. You might be saying, well, why didn't you put current liabilities? And the reason is that we don't have any other liabilities. So I want to tell our reader, hey, they're current liabilities with the subcategory. And then down here, but they're also total liabilities because they're all the liabilities we have. Also note that I haven't been formatted. The formatting here is indented. That's with the home tab, the alignment, and this indent button. And it just makes it look a little nicer. That's what you're typically going to see oftentimes. If you kind of know how the financial statements will be added up, then when you get to longer financial statements, it's a little easier to read. Meaning, if we have a colon, that means we're going to have a subcategory, and the subcategory might be in an inside cells and then summed up in the outside cells. We could do that also and represent that summing and those subcategories through the indentation and then the double indentation here. So that's fairly standardized. So then we're going to sum this up. Again, if we had the calculator, of course, we'd take the 800 plus 576 plus this 3,000. And obviously we really miss doing that, punching those numbers into the calculator, but Excel allows us to do the sum function here, which is, what we use 99% of the time is the sum function. And we're just going to sum that up. And there we have it. Now we might want to underline this and make it look a little nicer by going to the Home tab, Font, and Underline. There we have the liabilities. If we go to QuickBooks, obviously QuickBooks has generated this report as well, hopefully. So if we see how the QuickBooks formats this, we have liabilities, current liabilities. It's going to break out the payables in its own area, other current liabilities, and then total current liabilities. This is really important in QuickBooks because when you set up a different account, you have to set it up in one of these categories. You got to know, like when we set up unearned fees, we had to know that it's not an expense account, it's an unearned, it's a current liabilities account, and we have to put it in. If we don't put it in there, then things are going to get messed up. And again, anybody can do the data input once it's set up. Well, not anybody, but it's a lot easier to do the data input once it's set up and someone shows you how to enter the data a few times. So where the value really is knowing how to do the setup and how to recognize when there's a problem after the setup has been set up. So that's what we want to tie out, and that's where you need to know the theory or some at least some of the debits and credits. Okay, so then we've got the equity section. So the equity section, in this case, we're going to say the owner's equity. We're going to say it's a sole proprietor, so we're going to have a capital account rather than a retained earnings account. And I'm just going to call it one account. Usually, if it's a sole proprietor, we're just going to represent one account. If there's only one owner, and if you're thinking about a corporation or someone or a partnership, the concept's the same. Just think about all the owners as one entity. The only problem obviously the more of a problem with the equity section of a partnership or a corporation is that then we need to take that equity section and break it out between who owns the company. But in essence, if we think of them all as together one owner, then it's all basically the same concept. It's one number that's basically the book value of the company or the value that is owed to the owner. Now I'm going to do the wrong thing here and then tell you why. So obviously, if I say it's owner's capital, I'll just say it's owner's capital. And by the way, we found a home for all these accounts, so I'm going to make that yellow and say we did that. So now we just need to find a home for all these. Now, if I say owner's capital, and I'm just going to put it to the outside, I'm not going to sum categorize because there's only one number, so I don't need to put it in here and then sum it up over here. I'm just going to put it on the outside, and that's why that happens. If you see a lone number out there when before we had these subcategories, it's because we don't need to subcategorize. It's just going to the outside column. All right, so I'm just going to say that I'm going to put a negative, and I'm going to say there's the owner's capital right there, 50. It's the same exact name as is on the trial balance. That has to be the right number, right? It's not, but I'll tell you why. But let's use that number. And then if I add up, if I sum up the liabilities and equity, equals the sum of the liabilities and equity, are we in balance? And we're going to say, no, we're not in balance because the 54 of the liabilities and equity is not the same as the total assets. Why? What is wrong here? If we check each number, we check the assets. It's 4660, liabilities 4,376, owner's capital. What's going on? Well, I mean, if we look at QuickBooks, it'll give us kind of a clue here. If we go over QuickBooks, if we go down to the equity section, it has broken out draws, and it's broken out net income in the equity section. And that's kind of a hint here. We don't traditionally do that when we make the financial statements. We don't put draws in there or the equity section in the balance sheet. I mean, because that's represented on the income statement and the statement of equity. But it's kind of handy to see that those accounts are in there because that's what usually messes people up. Meaning, this balance sheet here is as of May 31st. And all these accounts that are balance sheet accounts are as of a point in time, but all these accounts have temporary accounts, meaning they're a story, meaning they represent May 1st through May 31st, meaning at May 31st, all these numbers in terms of the balance sheet should be in here. And so we'll see that in the closing process when we do that next time, and we'll see that as we do the other financial statements. But I want to show you the big picture now and how easy it is to just basically put that number into the balance sheet first and see that it's the big picture, and then give some more detail on that, which again is a little bit backwards than other textbooks might say to do this. But if you set up the trial balance like this, all you have to do is say, if I take all the blue numbers, then it's 41,684. Now remember, we're taking debits and credits here. So what we're taking in order to do that is going to be a 50,000. I'm just going to put it as a positive 50,000, and then we're reducing the equity section by 12,000 minus 12 plus the 89 income minus the expense 1536 minus the expense of 2,000 minus the expense of 400 minus the expense of 300 minus the expense of 200 minus the expense of 780 gives us the 21,784, and that is not what I have here. Let me do that one more time. We got 50,000 minus 12,000 plus the 89,000 minus 1536 minus 2,000 minus 400 minus 300 minus 200 minus 780. 121, 784. And I'm getting 41. What am I doing wrong here? Do that one more time. 50,000 minus 12,000 plus 89 minus 1536 minus 2,000 minus 400 minus 300 minus 200 minus 780. 41. So, okay. And that messing up with the calculator is probably the reason that originally we, did the balance sheet kind of last. But if you're using Excel, clearly, you just need, and you set it up like this, all you need to do is highlight this and say, well, Excel does it. How does it do it? Well, it takes the credits minus the debits and makes that calculation. So this number then should represent all the blue numbers. It's going to be all combined in there. So I'm going to say this equals the sum. I'm going to make it the negative sum because I'm going to flip the sign. And, well, let's do it the sum first, just to show you. Sum of all these numbers, the 50 down to the 780, that would be it. But now it's represented a credit, and we don't want a credit over here. Therefore, we need to flip the sign. We could multiply times -1. We could just type the number in there, but I would rather have a formula. So I'm going to put a negative in front of the equal. That's fine. So there you have it. And again, if you're in Excel, you could just say negative sum. And Excel will say, oh, that means you want to sum it up and flip the sign, or sum it up and multiply times -1. All right. So there's that number. And if we go back to QuickBooks, then we can see that we have the 12, the 50, and the 3,684 for total equity of 41,684. That should be what we have here. Negative sum of the 50 down. Okay, 41,684. I picked up the income statement. Now we're in balance because the total assets equal the equity plus the liabilities. Now let's go to QuickBooks. QuickBooks will do that for us. The 41,684, the 46,60 is the liabilities plus the equity, which equals the assets. So QuickBooks, the handy thing about QuickBooks, it'll never let us be out of balance. It won't let me make the mistakes, the multiple mistakes that I made over here, right? And if we're not in QuickBooks, then I have to use the double entry accounting system and go back and say, what did we do wrong? And in QuickBooks, what the frustration we have is that QuickBooks won't let me do this. Why won't it? And if we don't understand that it's not letting us do it because what we're trying to do will make it out of balance, then that's where the frustration lies when working on the QuickBooks side. And the answer to both of those things is just to understand a bit about the double entry accounting system. Okay, so now what we're going to do with the other two statements, we found a home for all these numbers, including this one, but this one we kind of combined together and made all this number. So this number is all these blue numbers. And what we're going to do now is say we want to reconstruct this number. We want more detail about it. So this number also represents the book value of the company, meaning its assets minus the liabilities is that number. And so that's kind of like, what the value of the company is worth. So if we think about that as the value of the company, where we stand, then what we want to do now is say, how did we get there? What's the story that brings us to that value? And that's going to be the income statement and the statement of equity. So the income statement is usually going to tell the story back a month in this case, or a year, in this case a month. So we're going to say, okay, how did we get to a value of 41,684? Well, sit down, let me tell you a story of what happened last month. And we're going to start that off with the income statement. So we're going to have revenue and expenses. So those are going to be these numbers here. We're skipping these two, revenue and expenses, for the month of May. So I'm going to copy this one. I'm going to paste it in H20, paste it to 1, 2, 3, values only. And I'm going to put this in the outer column. So we're in the outer column, not because it's a credit, but because there's no other number there. So I'm just going to put it in the outer column directly. I'm going to do it with a negative to flip the sign to a negative number. And there we have the 8,009. I don't need to sum any up because there's only one number. If I had multiple income numbers, I would need to sum it up. Most companies have less income accounts, then of course expense accounts in almost all companies, because although the income account hopefully is higher in dollar value, we only do one thing, whereas we pay for everything else, meaning we only generate our revenue specializing in a few things, and we had to pay for everything else, which are all the expenses. So expenses then will have a subcategory here. We're going to say expenses will be expenses colon subcategory. And then I'm just going to put all these expenses in here. In larger accounts, the real issue here on the expense side is what order do we want the expenses in, and what should we sum up some expenses. If we have too many categories in the trial balance, how can we shorten those up, or what would be a logical fashion in order to present those expenses on the income statement. With this very small income statement, we don't need to really worry about that. I'm just going to put all the expenses here, meaning I'm just going to take this expense, I'm going to say equals, bring over the salary, bring over the rent expense, and then I could just copy them down. I'm copying rent, supplies, I'm down to miscellaneous, insurance, and miscellaneous. Again, you could just copy and paste these over here as well, but note the format. I just put a colon, then we have the format here, indented, home tab, alignment, indent, showing that it's a subcategory. Then we're going to put the numbers on the inner column, not because they're debits, they just happen to be debits, but because in this case we're going to add them up or put the numbers in the inner column, not the debit column, the inner column, and then sum them up in the outer column. Because remember, financial statements, we don't talk debits and credits. When we present financial statements, that's just going to confuse people. So we're trying really hard not to have debits and credits represented in the financial statements. So we're going to say this equals the 1536, and we're just going to pull all these numbers down. I'm not going to group them up in any different way. We're just going to have the same numbers represented. Again, if it was a more complex financial statement, we would probably have some more detail in terms of these numbers as well. Well, in terms of grouping these numbers, we might have to group them differently and or order them differently. Expenses usually being the largest category of types of accounts within an organization. Okay, so then I'm going to go ahead and underline this. We're going to underline this, home tab, alignment, or font, underline, and sum them up and call that total expenses. All right, and then I double indented that. That's in the home tab alignment, double indent. And then we're just going to sum those up. Again, I could just highlight them, and Excel will add them up. We could put it in the calculator, but I've messed up too many calculations already, so I won't do that again. So 5,216, and so let's go to the sum equals the SUM, the sum. Just highlight those numbers for the expenses and enter. There we have it. If we want to check those numbers to the trial balance, and we have the trial balance set up in this format, then we could just highlight these numbers and say trial balance here. Excel adds it up to 5216. That's what we have there. Therefore, it looks correct. All right, then I'm going to go ahead and underline that. Home tab, font, underline, and go to the final line, which of course is net income. And now we're just going to do something with the outer column, in this case, subtracting. We've got revenue minus expenses. So I'm going to say within J30 equals that revenue minus those expenses equals the 3684. That's what we have there. Let's take a look at what QuickBooks does. So QuickBooks, we're on the balance sheet. Now we're going to say the income statement. First thing we need to know for QuickBooks on the income statement is they don't call it an income statement. They call it a profit and loss. So profit and loss is this statement. That is the income statement for QuickBooks. So here we got revenue, one category, and then the expenses. Note they're not kind of subcategorizing to the right-hand side, but they are still subcategorizing. So we have they are kind of they got the expenses, and then on the right-hand side, the subcategories. Then we're summing them up, and then we've got income minus the expenses. They didn't really break out the income and the expenses into their own column. But bottom line is the 3684 and the 3684 over here. Now we have one more statement that we need to create. We found a home for all of these statements and we found a home for them originally without group. Remember, we grouped them all into this number, and now we've broken them out into their own homes. So we found a home for everything. Although we don't see how this number yet ties into that number, that's what we'll do in the last piece here. So remember that this is the value of the company. This is the book value, assets minus liabilities is the equity, the value of the company. This tells the story of last month, but last month isn't the whole story, and this doesn't even tell the whole story of last month. It only tells us the earnings minus the expenses. One, there was draws here that we'll have to deal with, the owner taking out draws, and two, this business was in business prior to last month. So that's what this beginning capital is. That's how we're going to add those two in to our next timing statement. And we're going to start with the owner capital as of May 1st. Let's still just keep it May 1st. I should put the year, but I'm not going to. Okay, May 1st. So this is going to be the statement of equity, and the statement of equity is basically going to say, hey, this is the book value or the value that's owed to the owner as of the beginning of the time period. This is what happened during the time period in summary, meaning net income is what was generated, revenue over expenses, and any draws that happened in terms of the equity account, and then it's going to give us the ending equity account. So note that when we look at the trial balance, the reason this capital account's confusing is because it's kind of in between on the capital account. We don't put any dates. We say the trial balance is basically as of a point in time, as of 12/31, but that's not really true. It's really the case that the first half of the trial balance up here is as of a point in time balance sheet accounts, and the second half of the trial balance down here is going to be a timing statement. And this number right here is really confusing because it's really a point in time, generally, basically, as of the beginning of the time period, right? Because that's what the number was before we started, meaning it's what was in there as of the beginning of the time, plus any investments. In this case, it happens to be an investment that we put in there. So normally, if you look at the capital account here, it's going to be just last year's numbers, oftentimes, even though there's no date here. Then we could have investments that we put into the capital account, and then everything underneath it is going to be the timing statement. So in reality, we really started at zero here in terms of the capital account, what was in there at the beginning. Then the owner invested that 50,000. So we're going to say it went up by the 50. So we're going to say, I'm going to say flip the sign of this 50. And then it's going to increase by net income. So net income is what we calculated up here at this 3684. So that's going to equal the 3684. That's the story. I'm going to make this yellow. All right. And that will give us the net. Then we have draws. Sorry, then we have the draws. So we found a home for everything except for now the draws. The draws I'm going to pull in here. Say that equals the draws. Now we found a home for everything. And I'm going to, let's do this. Format this here. My formatting's needs a little work there. So I'm going to say this is the increase. And we could call it, I kind of like to think of it as the net increase, but I'm going to underline that. So what we're saying here is we started at zero because it's the first month. We invested the 50,000. And you might be asking, well, how would I know if that's the 50,000 investment or whether it was 50,000 from the prior period? It may have two components. It may have been that we had the investment and there was a prior period. Well, you'd have to go back to the trial balance and the general ledger in order to figure that out. If we went to tab 1 and we went to the capital account here and we drilled down on the capital account, then let's see, capital, we'd say, oh, there's that number. Where did that come from in terms of the data, the formulas? And I can say, well, that came from there, and that was an investment. in terms of QuickBooks, we can also kind of drill down on the equity number. If we go to the trial balance and we're drilling down on the equity, that 50, we can then see that transaction and drill down on that transaction and say what happened there. And so those are some ways that we have to kind of go back into the data and figure out what is going on. Okay, tangent. All right, so now we're going to say that the net increase, it went up by the 50, it went up by the net income, and down by this number. So again, if we summed it up, it wouldn't be right? If I summed this up, like often what happens, we'd get a number that doesn't match this number, a number that doesn't match if we just highlight all the accounts that are blue, all the equity accounts, the 41. Why not? Because these are credits, these are debits. And in plus and minus formats, these are increasing, net income's increasing, this is decreasing. So we might even call this less draws. So the formula then should be equals the 50 plus the 3684 minus this 12. And that'll give us the 41. Then I'm going to copy this, paste it here, and all right, I'm going to copy this, paste it there, and then I'm just going to change the end date to the 31st. And of course, this is just the 0 plus the 41,680. The 41,680 then is this number, 41,680. So again, if I could just highlight all this down, that's the 41,680, which should be the end number on our statement of equity. That end number, including net income, which is just a grouping of all the dark blue accounts, revenue minus expenses, which has been reported on the income statement, and the equity, which is not part of net income, but does decrease the equity. So there's the draws here. Did I said draws. Draws is not part of net income, but does decrease equity. All right, so there's that. So now we've got the balance sheet ties out. How does the balance sheet relate to or how does the income statement and the statement of equity relate to the balance sheet? They're part of this number. They're telling the story, meaning the income statement, net income, will tie into the statement of equity. The total statement of equity ending number will then tie into the balance sheet. Anytime you see a financial statement, that's the first thing you should check to see if you're looking at anything that makes sense. If that's not the case, what you're looking at doesn't make sense. All right, so now we found a home for all of this stuff here. And if we compare that to QuickBooks, then we got our trial balance and we looked at the balance sheet. So here's the balance sheet, assets, and they put assets on top, liabilities and equity on the bottom, but assets on top, liabilities and equity on the bottom. Here's the equity section giving us that 41,684. QuickBooks gives us some kind of breakout. They tell us, and this is not traditional, again, this is QuickBooks, tell us here's the net income for the time period, here's the draws. We're going to find those numbers. That's how the other statements are tied into the balance sheet. QuickBooks is trying to help us see how the other financial statements are part of the balance sheet. So then we're going to go to the profit and loss. There's that 3684. And the statement of equities, I won't draw up the statement of equities at this time, but the statement of equities in this case is basically being broken out in trial balance in terms of the balance sheet, because they're giving us the detail of the draws and the net income. Also note that in order to really get this right, like even though this balance sheet is as of a point in time, if you customize it, you need to have the date range really as of 5/1 in this case, to make the that point on the equity section correct. Meaning, like if this was for a year's time period, the ending equity number would be right, but these numbers might only be representing last month. And if you want to change that, you do need a date range, which is one reason we don't have those numbers usually on a balance sheet, because the balance sheet is as supposed to be as of a point in time and not have a date range. This number and this number are not permanent accounts, but temporary accounts, which is why they're not typically on a balance sheet. But in any case, those are going to be the how we put this together. So again, most people aren't going to spend a lot of their time putting something like this together unless they work in public accounting, because in public accounting, the job, of course, is to reformat that information. So it could be very possible in public accounting where we take the QuickBooks numbers, we put it into a trial balance, we adjust it, we make any adjustments that we think need to be made, and then actually generate financial statements or compile financial statements in a format that that can then be represented. So that could well happen even if QuickBooks is being used. But if we're just putting the numbers into QuickBooks, we need to have some understanding of this information as well, so that we know how to set it up in QuickBooks, so that we know how the numbers are going to be input. If we can put the data into QuickBooks and do a bank reconciliation, then we're doing pretty good. Then it's just a matter of how are we going to format these numbers in QuickBooks. So for small businesses, if we're able to get all the data in there and reconcile, that's a key thing. And then you have some confidence that the numbers are all in there. And then it's really a matter of where those numbers are going to be formatted, meaning did you put them into the right categories? They're all going to be in there somewhere. You'll be in balance, but are they in the right categories? And if you do all that, you're looking pretty good. And then the next step would be the adjusting processes. Do you have the adjusting entries in there? How many adjusting entries, do you need to do them monthly, or what adjusting entries do you need in order to get the data that you need for decision making? But those are how those two are related. Next time, what we will do is we'll take the financial statements, and these are done now. So we're going to go to the closing process. You don't have this tab on here, but we're going to go to the closing process here, and we're going to close out the financial statements to be ready for the next time period. And we'll see how QuickBooks does that and the pros and cons to just the general format of the way QuickBooks does that, because it does cause some problems sometimes. All right, that's going to be it.